This is episode 195 of Zen and the Art of Real Estate Investing with my guest, Andrew Kim. Andrew is the CEO and co-founder of Share. Share is the easiest way to build a portfolio of fully managed rental properties. Andrew, you make it sound it's so easy. Welcome to the show.
Thanks for having me. And yes, it is easy.
Yeah. Well, let's get into how you got to figuring out the easier way, because I know you started the harder way, like a lot of us did. Did you start trying to BRRRR in Canada and it didn't work out as easily as you might have thought?
Yeah, BRRRRs sound easy on paper when you could put it in like a 4 or 5 letter acronym.
But you wrote this. Acronyms make it sound like, I'll just follow this 5-step model, no problem, and it's going to work.
Yeah, the recipe is an acronym, so it should be super basic and super simple to follow. It's the ABCs. I started doing BRRRRs outside of the Greater Toronto area. So think like 75 miles outside from the core. Mm-hmm. Back in 2010, homes were like 350,000, around 300,000 US. Stuck real bad at it. I thought I was good, but when I actually sat down to look at the numbers, that's when you realize there's a lot of these numbers that you kind of emotionally forget about and say, hey, I'm doing a good job. But yeah, really bad at it in hindsight. And then, moved to the US and forgot about Canada.
Well, what do you think? What were your biggest mistakes in trying to do the BRRRR, outside of lack of knowledge on the entire process? Because I've been there as well. Even as an experienced investor, I still think it's generally you can make mistakes on properties, especially when you're doing any type of renovation. So where did it go off the rails for you?
I think generally I probably should have sought some mentorship ahead of going into this. Like, I read stuff, I read a lot of different material, but having somebody that has a track record that you can actually message quickly and give you like firsthand experience and tactics to how to address certain problems would have saved me a ton of money and time.
Yeah, I definitely agree with that. And I feel like it's like you almost feel like, well, I've read this stuff, so I have a general knowledge. And it's almost like kind of embarrassing to ask someone because you're not sure if you're going to ask them something that like it really sounds stupid, when it's not, because you've only read a book, but then you realize later, like that wasn't a dumb question. That was a good question.
That's a good point. Like I always tell people, like come in vulnerable and be, self-aware and don't be afraid to ask the dumb questions.
Did you carry that thought with you when you got to Share? I mean, we'll go through the journey, but I mean, that's kind of, you're trying to make it easier for people to figure out who maybe have less time or don't want to do BRRRRs, like you said.
That is exactly it. Like, fast forward like 10 years from my first sort of US investments, my portfolio, like I was completely, I guess in that world, they would call that turnkey where you work directly with a property management company. But I was still somewhat high touch. My property management company really raised my rents. Probably didn't do the research properly. I probably could have refinanced a million times and bought more. But there's no one to really identify these levers and say, hey, Andrew, there's these 3 levers. These are the costs for each, and these are the returns of each. Which one do you want us to do? So that was kind of the impetus moment. It was like, I need something for myself. I need what we call an asset manager that sits on top of the property manager to really actively try to grow my portfolio while I focus on doing whatever I'm doing full-time, family, profession, and whatnot. So yes, that definitely carried.
I was thinking just before you said that, an asset manager to run the project manager or property manager, like, that's actually somebody to just, because those are different types of advice, to say like, oh, well, how can I get depreciation from this asset? Like the realtor they don't even know what depreciation is. They don't even own any houses, most realtors. So, which is crazy, by the way. And then, property management, if you don't have a lot of units, like you're not a high client for them. If you have 2 single families, they could care less of them.
Yeah.
So they're not really working hard to up the rent. They're just going to get it up a little. So it looks like they're doing something. And so, like you said, there are all these different things, but there's not like one overriding person who can tell you, hey, you need to focus on this. There's a lot of different people who can help with that.
Yes, definitely. Chasing the bottom line, chasing the top line, looking at more than just repair, maintenance, and leasing. What's your financing strategy, everything.
Describe your ideal avatar. I think we just went through it a little bit. Like if someone looking around, who did you guys as a company think? Because I always think this is really important when you're building a company. Like who do you think your ideal client is? Of course, others may come in, but describe for us what that looks like.
Yeah. So typically an experienced, jaded investor.
Right? Said that before.
Yeah.
They've had failures of the support in the back end or too many clowns in the clown car.
Yeah. That like they've done it a few times. They still have it or they liquidated them or they've seen the value. They got a good, like few number of units, but they're doing it themselves and realize, look, this is too much.
Yeah.
So now they're looking, and they typically come from, let's call it the states where, you know, the average real estate price is over 750, where local investments don't make sense. The landlord policies aren't in their favor. And they're looking to go now out of state. So that's typically who we're going after. And then, they're looking like, look, I can't do this anymore. And they actually, a lot of them are like, can you take over my existing portfolio? So that is our avatar, typically 1 million sort of net worth, including their real estate and the primary residence.
Yeah, that makes sense. I can see that first avatar really well because it was kind of you. You know, you're like, hey, look at all these. Wait, these aren't performing. Wait, I have, 600 grand in equity over 6 properties. Like, why aren't I making this do a better job? But it's because you're busy doing other things. And I think that's kind of like the hard balance of keeping a W-2, starting to become an investor. And then what I've seen is just from knowing and buying from mom and pops over the year, like the properties are doing quote well. So that's why so many like people like me are always, you're trying to buy properties and you're like, what are your rents? That was like 15 years ago, the rents. And they're like, well, I bought it 30 years ago. So I'm not, I own it outright. So what, it can make so much more money. And I think that makes sense to me for the avatar, either too busy or like, hey, look, these properties, I just don't really want to manage them all at the same time and be responsible when there's way more you can do to increase their overall equity and value.
Yeah, I agree. Like speaking to a seasoned investor, even with 1 unit under their belt, is so much easier than a novice. We do get a lot of like first-time investors, and we're okay with that. But we do prefer, if you have some experience, just because the communication is a lot more fluid and they have the infrastructure and businesses set up. So it becomes a lot easier.
Yeah. Well, it's hard to max out the like best part of your business, which just not making it one thing. But this asset management thing is really cool to me because I've like, right when you talked about it, I was like, ooh, yeah, that really makes sense. Like, yeah, if you just have one property, you're like, there's not that much to leverage, and like you said, not as many levers to pull if it's just your first property. But that, it's a good educational way for them to learn like, hey, there's an easier way. You don't have to feel like you have to be the property manager. Don't you think it's helpful though, to have had your background and, tried to be a landlord, tried to do the BRRRR, own the properties, understood that you were losing because that makes you make a better product, but also help in that kind of management issue in the middle, help other investors much better. So what's the plan for Share? I mean, you guys are obviously growing. You're looking to grow the avatar of people who find you and grow into new markets. Where are you going from here?
Yeah. So, we want to continue growing our sort of technology platform to be able to, I guess, for clients that want to bring their own portfolio and say, hey, look, I'm tired of working. I think I do need an asset manager. But also working with a lot of realtors and real estate agent or real estate professionals to complement their services with sort of out-of-state investment opportunities. So we want to work with a lot more real estate professionals, potentially considering like a white label opportunity where we could say, hey, look, just you want an out-of-state single family rental with Jonathan Green, here's the site, right? So we're toying with a few different options. But yeah, that's the plan. Experienced investors looking to, be exceptionally hands-off and be a lazy investor and want to build their portfolio through single family. We'll start there and then probably expand into larger multifamily.
Yeah. Ooh, yeah. That's interesting. And that's good though, that you built it up this way, because I think then you'll be able to make sense. Cause obviously multi is a kind of a different due diligence sector and everything like that. But if you build kind of the system the right way, then you can just kind of, morph the formulas into that as it goes.
Yeah, we could graduate the clients, right? They've got a single family portfolio. Now they can they built enough equity, they can go into a pretty reasonably per unit cost of a nice multifamily.